the Capital Markets Authority in Kenya, has given approval for TransCentury to list fully on the Nairobi Stock Exchange. Thus far, they've traded marginally on the over-the-counter market through various banks in Kenya. Let's find out what's their strategy going forward. We're now joined by the CEO, Gachao Kiuna, who joins us from our studios in Nairobi. Thanks so much for your time, Dr. Kiuna. Okay, so CMA's given you approval, full listing. We're expecting you to then come on stream, but it's only going to be an introductory listing on the alternative investment market. Why is that?
This is very much part of a longer-term strategy where it's really important for us to move towards becoming a public company. And it's a process that we've been carrying on for the last 2 years. So it's a longer-term strategic move as opposed to a more short-term opportunistic opportunity to raise capital locally.
I mean, some say that what you're doing essentially is trying to find your feet, trying to see how the market values you. The fact that you've traded limited terms over the counter means that there is some kind of pricing, some valuation for you. Will that in any way influence how the market views you, the valuation of the company once you come full stream?
Yeah, it will somewhat. The over-the-counter market trading was interesting. It does have its own limitations. In that it is a market where there's a limited, amount of shares that can be traded. It's 100,000 shillings per transaction, which is quite high for our market. And it's also, a market that itself doesn't have, much access for the, broader investing community. So for us, moving from the OTC to the main exchange, to the Nairobi Stock Exchange, is really going to help to open up the stock to more investors.
Okay, once you do start trading shares, ultimately, what's the value for investors? Because you're known as a company that has assets within the power, the transport and the construction space, key sectors to drive growth in the economy. You should be doing well.
Yeah, I mean, our story is a real growth story. You have to remember, we started with only 24 million shillings or $500,000 worth of capital in 2004. And that's grown to, closer to $200 million or almost 15 billion shillings of value over the last 6 years. So it's been a tremendous growth story. We have a lot of great opportunities going forward. And the real reason is that we've done two things. One is we've picked the right sectors. We're focused on infrastructure, we're focused on energy, we're focused on transportation, and we're focused on construction. But the second thing we've done is really focus a lot on execution to be able to drive through the growth.
I mean, we've seen your revenues increase in the region of about 25% in the last year, but certainly 2011 is a different ball game altogether. Inflation creeping in, growth subdued, investors reticent to come into Kenya. The fact that you are involved in core infrastructure sectors bodes well, but what's the sort of impact that the broader growth dynamic is going to have on the growth of your business?
I think two things to say. One is you must remember that TransCentury is no longer just a Kenyan company. More than half of our assets today are outside of Kenya. We're in Tanzania, we're in South Africa, we're in Democratic Republic of Congo, we're in Zambia. So we're really across the East Central and Southern African continent. So from that perspective, it's quite a balanced portfolio in terms of risk. So I think that's the first, important point to make. But I think the second important point to make is that we're in very fundamental sectors of the economy. So, and although it is true that we will see some of these short-term shocks, hitting the economies, in the medium term and in the longer term, the fundamentals never change. And these are sectors themselves that will continue to grow.
Now, earlier this year, TransCentury indicated that it wanted to issue some bonds to the value of about 50 million US dollars. Now, we do know that obviously the market's a little bit depressed at the moment. There's been a bit of a liquidity squeeze. Are you still going to go ahead with those plans?
No, that's actually in place already. We actually are the first Kenyan company to have closed a Eurobond. So we have a Eurobond which is listed on the Stock Exchange of Mauritius, which started trading earlier this month. which is traded on Euroclear and Clearstream. And that's a convertible bond program for about 75 million US dollars.
Okay, and then just broadly speaking, you're in the East African community, you've got exposure in Southern Africa, you're in infrastructure. I mean, on paper, it sounds like a great story. Is there anything you're really concerned about in terms of market conditions going forward? I mean, I've posted to you some of the macro economic issues that may create variations for you. Are you just bullish?
We continue to be bullish, and I'll tell you why. When we started, for example, in the power sector, and I'll give you just some metrics so you understand just how things have evolved. In 2004, when we started, there were about 500,000 Kenyans who had access to power, 500,000 households. Today, that number stands at closer to 1.4 million. We're very confident that that number will very quickly move towards 3 million plus. And we've really seen it grow. It's growing at least 200,000 connections a year. And that's what's really driving our business. And we really don't see the fundamentals of that changing so much.